Welcome to TalkTickers. We're here to break down the essential insights from the latest earnings calls, specifically for experienced investors like you.
Yep, cutting through the noise.
Exactly. And today we're diving into Betterware de Mexico's Q1 2025 results. That covers both Betterware and the Jafra brands.
Right. And, well, it was definitely a bit of a mixed bag, maybe leaning towards challenging this first quarter.
Okay, let's start with the headline numbers then. What's the snapshot?
So consolidated net revenues, they dipped slightly, year over year, down 2.9%.
Okay, just under 3%. Manageable on its own, perhaps?
Perhaps, but then you look at gross margin, that saw a more significant drop, 303 basis points.
Oof, yeah. Over 3 percentage points. That's quite a squeeze.
It is, and that flows downwards naturally. EBITDA took a really substantial hit, decreasing by 29.1%.
Wow, nearly 30%. That's significant. And what about cash generation?
Yeah, that's another point. Free cash flow was actually negative this quarter.
Negative. Okay. Any specific reason called out for that?
Yeah. Management flagged extraordinary outflows, mainly within Jafra Mexico. Things like increased working capital for brand renewals, innovation prep, plus higher tax payments there.
Got it. So some specific timing issues maybe.
Yeah.
And how did all this affect debt levels?
The net debt to EBITDA ratio ticked up slightly, just a bit, to 2.08.
Okay. So revenue down a touch, margins squeezed, EBITDA down significantly, negative cash flow.
Mm-hmm.
But they still proposed a dividend.
They did. 200 million pesos, which is interesting given the other numbers.
Right. What's the thinking there? Do you suppose confidence or...
Could be signaling underlying confidence, commitment to returns. But yeah, juxtaposed against negative free cash flow, it certainly suggests a careful balancing act with capital.
And despite all that, they're holding their full year guidance.
Seems so. Still guiding for 6% to 9% growth in both net revenue and EBITDA for the full year 2025.
Ambitious, given the Q1 performance. Sets up an interesting year ahead.
Definitely one to watch. It hinges on their strategies working and, well, the macro environment cooperating.
Okay, let's dig into that revenue decline a bit more. That 2.9% drop, where did the pressure really come from?
Management pointed to tougher macroeconomic conditions, both in Mexico and the U.S.
So broad-based weakness?
Pretty much, but it hit Betterware Mexico harder. Its revenue was down 9.8% year over year.
Almost 10% for Betterware Mexico.
Okay.
And Jafra.
Jafra still grew, but the pace slowed down, moved from double digits last year to single-digit growth this quarter.
Right, so both feeling it, but Betterware Mexico more acutely. Now, that gross margin dropped 303 basis points. What drove that?
The biggest factor, according to them, was the Mexican peso. It depreciated about 20% year over year against the dollar.
20%? Yeah, that makes imported goods much more expensive.
Exactly. That hits Betterware particularly hard given their sourcing model. But it wasn't just currency.
Okay, what else?
Lower sales volumes at Betterware Mexico played a part, and also increased promotional activity there to try and, keep things moving.
Right, trying to stimulate demand, but sacrificing some margin.
Precisely. And Jafra Mexico also faced some margin pressure from their own promotions aimed at driving volume.
So a combination of external currency headwinds and internal promotional strategies really compressing those margins.
That seems to be the story, yes.
Which, as you said, flows straight down to EBITDA, that near 30% drop overall.
Mm-hmm.
How did it break down between the units?
Well, it reflects the pressures we just talked about. Betterware Mexico's EBITDA fell by 31.6%.
Even steeper than the consolidated number.
Yeah, indicating it bore the brunt of the profitability hit. Jafra Mexico's EBITDA also decreased, but a bit less severely, down 25.2%.
Okay, so both down significantly, but Betterware Mexico's profitability suffered more. Let's circle back to that negative free cash flow. You mentioned Jafra Mexico and extraordinary items.
Correct. Management was quite specific. It was primarily Jafra Mexico. They deliberately increased working capital investment there.
Why?
To get ready for upcoming brand renewals and new product launches, sort of investing ahead of the curve. Plus, they mentioned higher tax payments in Jafra Mexico this quarter compared to last year.
Ah, okay. So potentially one-off or timing-related factors.
That's what management suggested. They expect a return to more, let's say, normal cash flow generation next quarter.
Right. So clearly facing challenges. What are they actually doing about it? Let's start with Betterware Mexico. What are the strategic responses?
They've got a few things going on. One is strategic pricing adjustments. across all price points, trying to balance affordability and margin.
Tricky balance to strike.
Very. They're also ramping up promotional activity. The goal there is specifically to keep the sales force engaged and motivated, especially if demand feels a bit soft.
Makes sense. Keep the sellers active.
Exactly. And they're using more data analysis to understand and communicate better with that sales force, trying to improve engagement.
Okay. Pricing, promotions, engagement.
Yeah.
What about products and costs?
Still focusing on innovation, bringing new things out, but also, importantly, they're actively revising product cost structures, trying to find savings there to counter those import cost pressures.
And linked to that, are they looking beyond China for manufacturing? You mentioned the import costs.
Yes, absolutely. They explicitly mentioned evaluating alternative manufacturing options. They're looking at Mexico itself, Southeast Asia, and other regions too.
Diversifying away from China risk.
Seems like a clear move to mitigate those risks, yeah. And related to that whole U.S.-China trade dynamic, they've actually halted the Betterware U.S. expansion.
Halted it completely. Wow. Why?
Directly attributed to the high tariffs and the general uncertainty around U.S.-China trade, they figure pausing it will save them maybe $2 to $3 million this year.
That's a pretty big strategic shift, shelving U.S. expansion for now. Okay, turning to Jafra Mexico, what are their strategies?
Jafra's approach is a bit different, tailored to their situation. They're working on rebalancing the product mix.
How so?
Using pricing and promotion strategically to improve margins, but still keep sales volume up, especially in categories that are proving more resilient, you know?
Right, focus on the stronger areas while managing margins.
Exactly. They're also pushing ahead with their brand renovation plans, launching new products to keep things fresh.
And anything on the operational side for Jafra?
Yeah, they mentioned implementing strategies to make it easier for their distributors and associates to do business, streamlining things, and specifically trying to attract a younger demographic into their sales network.
Interesting angle, attracting younger sellers.
And they're also leveraging their manufacturing plant in Querétaro, Mexico, using it for both the Mexican market and the U.S. market.
Ah, so using their existing assets efficiently. Okay. Given all these challenges and responses, what was the overall message from management? What's their takeaway?
They really emphasize what they see as their core strengths. You know, the asset-light model, giving them flexibility, the resilience of their person-to-person selling model, which they feel taps into, like, gig economy trends.
Right, playing up the fundamental business model.
Yeah, and they stressed the long-term potential they see in household goods and beauty categories. Despite acknowledging the Q1 headwinds and the current volatility.
They sounded confident.
Reasonably so. They expressed confidence in navigating the current environment and, crucially, hitting that full-year guidance we mentioned earlier, but with a key caveat.
Which is?
Assuming macroeconomic conditions stabilize, that's the big if.
Of course, always is. Okay, so let's zoom out. Putting these results in the broader context, what should investors really take away from this?
Well, first, it really underscores how much these broad macroeconomic factors matter right now. Softening demand, currency swings, global political uncertainty. It's hitting consumer discretionary spending, and Betterware is feeling it.
No company is an island.
Definitely not. And that decision to halt the U.S. expansion, that's a very clear example of how international trade policy can just force a major change in strategy.
A direct impact.
Absolutely. The fact they're maintaining guidance despite the rough Q1, well, it suggests management has faith in their own plans and the strength of their main Mexican business.
But requires a leap of faith from investors too, maybe.
You could say that. It means that the next few quarters are critical. Investors really need to watch if these strategies start to pay off and offset those macro pressures.
And the dividend.
Yeah, the dividend proposal. It shows a commitment to shareholder returns, which is positive. But given the negative cash flow and uncertainty, it also signals, perhaps, a cautious approach, balancing returns with managing cash carefully.
Right. A lot to weigh up. Okay, let's shift gears slightly. Time for our This Is Not Financial Advice segment, where we toss around some, let's call them unconventional ideas sparked by the call.
The outrageous but plausible trade.
Exactly.
Yeah.
What sprang to mind for you from this Betterware deep dive?
Okay, so thinking about Betterware pausing U.S. expansion because of China tariffs and actively looking at manufacturing in Southeast Asia, maybe specifically Vietnam was mentioned or implied.
Right.
Here's an idea. Maybe consider a long position in a Southeast Asian ETF, maybe one focused on manufacturing or even specifically Vietnam if you can find a good one.
Okay, why? The connection isn't direct.
No, it's indirect. The thought is Betterware's move could be like a canary in the coal mine. If more companies start shifting manufacturing out of China due to trade issues and costs, places like Vietnam could really benefit from that foreign investment and activity.
Ah, so it's a play on a potential broader trend that Betterware's actions might be signaling.
Exactly. You're betting on the ripple effect, not on Betterware itself directly benefiting from this ETF.
Interesting. Playing the second order effects. Got another one?
How about this? We talked a lot about the peso depreciation hitting margins, right?
Yeah.
And management adjusting prices.
Yeah, a key theme.
So maybe a contrarian play.
Yeah.
Go long a Mexican consumer discretionary ETF, but hedge it by shorting the US dollar against the Mexican peso. So short USDMXN.
Whoa, okay. Unpack that. Long Mexican consumer, short the dollar peso.
Yeah, it's definitely higher risk. The idea is if Betterware and maybe other Mexican consumer companies manage to navigate these currency headwinds, stabilize their margins through pricing power or cost control,
If they succeed.
then the potential upside in the Mexican consumer stocks, the ETF, could outweigh the currency risk, especially if the peso finds some stability or even recovers a bit longer term. You're betting on the resilience of those companies in the market despite the currency issues.
A complex bet on corporate strategy effectiveness and market resilience against currency headwinds. Definitely fits the outrageous but plausible tag.
It's thinking a few steps ahead for sure.
All right, fascinating ideas to chew on there. And that brings us towards the end of our deep dive into Betterware de Mexico's Q1 2025. We looked at the numbers, the pressures, the plans.
And the potential ripple effects.
Indeed. Remember, everyone, those trade ideas are purely for discussion, food for thought. Definitely not financial advice.
Please do your own research.
Absolutely. But we'd love to hear your thoughts. What did you take away from Betterware's quarter? What companies are on your radar? Let us know.
Yeah, we're always interested in different perspectives.
Thanks so much for tuning in to TalkTickers. Join us next time as we dissect another crucial earnings call.